Hi, it's Ethan here with AZ Health Insurance Brokers. Today I'm going to cover the 3 most common mistakes when purchasing health insurance. The first common mistake that I see is buying based on the name of the insurance company. And what I mean by that is if you're used to having a group plan through a previous employer, through your business, and you switch to individual or family plans through the marketplace or private carriers, a lot of times the networks are different. So Blue Cross Blue Shield or United through an employer oftentimes is significantly different than the Blue Cross Blue Shield or United that you'd be purchasing through the marketplace there. So that's a really common mistake where somebody purchases a plan. They're not really in network with that network through their doctor, so they either gotta repurchase another plan or they gotta switch their doctors. Something common to watch out for. Second would be the frequency of use. Now, with the frequency of use, it can sometimes be tricky. Sometimes you can estimate it pretty good, other times it can be tricky because you don't really know. So and what I mean by that is if, using a family as an example, with a family, if they never go to the doctor at all, and they want to contribute to an HSA, then an HSA plan would probably be a really good fit there. However, let's say for instance, they're not going to contribute to the HSA, and they go to the doctor for the common sniffle, sneeze, somebody needs to go to the urgent care, different things like that. On an HSA, all those times that you go in, you have to pay out of pocket until you meet that deductible. So for that scenario, that probably isn't the best fitting plan. Maybe a bronze with copays or a silver plan with copays would be more applicable to that type of a scenario there. Now on the flip side, if somebody knows for a fact they're going to have a surgery, they know they're going to meet their deductible out-of-pocket maximum, then you can go in, okay, which plan has the lowest out-of-pocket maximum so that we can save the most money across the board when it comes to premiums and when it comes to our out-of-pocket maximum as well there. Third option to keep in mind that I see as a common mistake is underestimating your income. So if you're going with a marketplace policy, a lot of people are able to qualify for discounts based on income. Now, the income that you put in is going to change and or alter the discounts that you get on a monthly basis. So if somebody puts down, so like this year, it's 2023, we're estimating this fall our income for 2024. If we underestimate the income and we end up filing taxes for 2024 and it ends up being significantly higher, then you're going to have to back pay the difference when you file your taxes. So that's just something to keep in mind, at least to think about. Now, for self-employed people, it can be hard to estimate the expenses there, but if you're W-2, then maybe it should be easier there, unless you're going to be switching jobs and there may be variables there. But again, just to recap, the 3 common mistakes to watch out for is going to be buying based on the name and make sure you're verifying the network for the plan that you're going to be purchasing. Second is going to be the frequency of use there. And then the third common mistake is going to be underestimating the income there.